Tesla's golden goose, worth $1 trillion.
I think I summarized it pretty good, but you think another trillion in market cap from here?
I mean, Kelly, I think the golden goose is autonomous. I think that's worth $1 trillion in terms of valuation. The federal roadmap will now start to get paved. And that's ultimately, from a valuation perspective, I think autonomous and robotics is more than the company itself. So I get some of the brand issues and maybe some of the headwinds in Doge and, you know, in terms of everything Musk is doing in the Beltway. But this continues to be the bet for the ages in terms of Musk betting on Trump, and that's going to hugely benefit Tesla. And that's why we think there's golden buying opportunity in terms of this sell-off.
So
yeah, I've been explaining this for a while. Here's the issue, okay? The autonomous driving opportunity, the robotaxi network, we're talking this is going to take years. This is going to take literally years to pull this off, okay? It's not like it happens overnight or something like that. And additionally, and this is very important, everybody understands, additionally, I don't think Tesla will actually make money from this business in terms of profits for years. It's going to be a long time. People are under this assumption like all this robotaxi stuff is going to get rolled out in the next year or two and they're just going to be making so much money and so much profits. It's not happening. The rollout's going to take a long time, and to make money is going to take even a longer time. Like, they'll lose money, in my opinion, for quite some time. And why are they going to lose money? Because everybody's going to want to make money. Amazon's competing in this space, right? You have Google competing in this space with Waymo. And Google, the thing with Google and Amazon, they make so much money from their other businesses that they could lose money on this for years if they want. That's fine. They don't need to make money from this. If they lost a fortune on this for years to go in the future, they don't care. So you think they're going to price competitively? Yeah, they're going to price extremely competitively against Tesla, right? Whereas Tesla is not making that sort of money. Like the amount of profits Tesla makes compared to Amazon and Google is not even on the same level. So we're talking about kind of a night and day difference there. And so the fight will be strong. Then you're going to have obviously Uber playing in that space as well. They'll partner with companies. We'll see, right now they're kind of partnering with Waymo. We'll see what happens there. But no one's going to be making money in that space for years to go in the future. It'll be a money loser, just like Uber and Lyft were a money loser for a long time. Right? Uber's just started to flip to profitability in kind of like more recent years. Like Uber lost, I don't think people realize Uber lost money for the longest time. And that's with only one competitor. And their one competitor was not even that serious. It's Lyft. It's Lyft. Like what? Okay? Look at Uber. Look at the losses Uber was taking. They're finally flipping to profitability after like 100 years of being in service. Okay, not that long. But you get the picture, right? Uber's not some brand new company. Like Uber's been around a while, and they finally have been flipping to profitability. It took a long time to get there. And so when you're thinking about Tesla and actually making any money that actually is accretive to the bottom line, we're talking years from now. Because Google will be relentless in the space, Amazon will be relentless in the space, and they're both going to be willing to lose a lot of money. And then Uber is going to have to fight strong because their whole business model is going to be in jeopardy, or at least half of their business model, right? Uber Eats is a whole other component, but a huge component of their business, so they're going to fight strong. So you're going to have three serious competitors. You have Google, and this is coming as a Tesla shareholder. I'm just telling you how it is. You're going to have Amazon competing hard, Google competing hard, and Uber. That's three serious competitors. And you'll have other entrants as well that will be competing in the space. I'm just thinking about the ones with big pockets. Those are the three. And when we think about how long it took Uber to become profitable, long time. And that was with one competitor. And that competitor is not even a strong company in Lyft. Not even a strong company. So the moral of the story is here, people are just getting way too excited about this way too early. There'll be a time to be excited about this. It's years from now. It's not right now.
I'm sure that investors in the stock would agree with you. The ones who have been in this, they're passionate.
It reminds me a lot of Tesla back in the day. Tesla went on an incredible run shortly after its IPO, kind of through about 2014. And everybody was so excited about EVs are the future, and it's going to be this huge thing, blah, 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 right? And they're right, like EVs were the future, by the way. They're still actually relatively small market share, but the thought process of Tesla's this future looking company, EVs are going to be this big thing over time, right? Like, that's all fine, but they got way too excited about that in 2014. The time to get excited about it really was more in like 2018, 2019, after the Model 3 launched. That was the time to start getting excited about it, right? And then the stock went on an absolutely epic tear. And if you look at what the stock did from 2014 through 2019, it did a whole lot of nothing. And so, yeah, people just get too excited about these things way too early, and then stocks stagnate for years.
Committed, of course, they think, autonomous is the play here. But I still see a lot of frustration on social media about the performance lately. And even a couple of hours ago, Musk was tweeting about how the Boring Company is building a tunnel in Dubai or something. I mean, he has a lot going on. Would they prefer that his focus is more on Tesla?
Yeah, look, I think a few years ago, that would have been the preference. But I think the reality is, even some of the stuff Seaman talked about, everything we're talking about in terms of AI, having that front row seat at the table, in that Trump administration, that's bullish in terms of AI innovation. I think more and more projects, especially that come through and that he's going to drive, I think is going to be very important in the China tariff discussions. And they have a massive innovation line coming out in terms of Optimus, in terms of autonomous, everything we see with Austin in terms of June. So look, haters are going to hate as they always do in Tesla. But I just think this sell-off here, I think it's just a massive buying opportunity given we see a $2 trillion market cap on the horizon.
Tell me about the China business. How much under threat is it, and what do you think might happen there on the tariff front?
Yeah, look, I think they're actually going to be least exposed when it comes to China, just because I think there will be exclusions when it comes to tariffs for Apple, for Tesla, some of the chips from NVIDIA. And look, 40% plus of demand as well as manufacturing comes out of China. But that's also why, Musk is 10% politician, 90% CEO. He plays well in the sandbox in Beijing. They want that trophy case of Musk and Tesla in China. And he's one of the rare people, along with Cook, that's able to be successful in China as well as the U.S. And I just don't
disagree. So that used to be the story, and I used to talk about that for years, but the story's changed. The moment he attached himself completely to Trump now, that if Trump does tariffs on China, it reflects bad on Musk now. And so they could easily attack back at Tesla now, right? Because Musk is seen as the guy that's right next to Trump. Heck, a couple days ago, they had a press conference in the Oval Office, and Trump's sitting in the chair, and Elon Musk is standing up, right? And so now China can send a message through Tesla to get directly to Trump, right? And so, but that used to be very true about Elon Musk. Like, he had a great relationship in China, and really, he got a lot of special privileges over there. Yeah, now that he's attached to Trump, good luck. Good luck getting those special privileges now. That's going to be very hard to come by.
A lot of sort of the worries there are well overdone. I think growth will return in terms of the China market.
All right. Do you think that is also what makes Musk's presence in Washington more help than hindrance? And how should competitors think about that?
Yeah, look, he's one of the rare ones that basically has that blessing from Beijing. And that's something from a Trump perspective as we get into these tariffs, as you'll see, obviously coming up today and just over the coming months, he's going to be a huge asset for Trump when it comes to China. He understands Beijing, has strong relationships in the government there, and also he understands AI. It goes back to NVIDIA, chips, everything we're seeing with Apple. That's why the street, I think, is kind of saying in this game of high-stakes poker, not as worried. That's what you're seeing in the stocks. But I do believe Musk, despite all the sort of worries, him having that front row seat in the White House is bullish for Tesla. And I think $1 trillion is the autonomous value. That's why I just view this as noise, despite some of the pain in terms of the sell-off.
Yeah, I think at the end of the day, we've definitely been on a risk-on market, right? And so assets that do very, very well in a risk-on market, and we've been in a risk-on market for 2 years, are things like Tesla, Bitcoin, NVIDIA, right? Those sorts of stocks. Like, that's just how it is. And so that will remain like that until the risk-on kind of fades, and then we go kind of risk-off, and then it'll be a whole rotation of safety stocks and whatnot, which will be very fascinating, and then we'll have our next growth cycle. So it's a whole process, man. It's a whole process, but always fun.
Hey, it's Jeremy. I hope you really enjoyed watching that clip here today. What you're looking at in front of you right there, that's 1000xstocks.com. That's my advanced software that I've been working in the background creating for a long time. This software is so much more advanced than what others are presenting out there in the market. And as somebody that's been in the market 15 years, I want to create something that was simple, that had exactly everything I needed to make my judgments on companies, such as forward P ratios, 2-year out forward P ratios, price to sales ratios, forward price to sales ratios. I wanted the ability to be able to compare different companies versus each other. I wanted to be able to compare a Meta versus a Google versus an Apple and be able to see all those different metrics laid out all next to each other. I wanted a service that I could listen to conference calls right through and even be able to toggle and adjust the speed I wanted to listen to those conference calls. I wanted a service that I could search SEC filings right through. I wanted the ability to do that all in one service, and that is exactly what I've created with 1000xstocks.com. If you want to apply for access to this, go to the description area of this video. You can click that link and go ahead and apply for access to this. If you don't want to do that, you can go to 1000xstocks.com. Enjoy.
Here is the Patreon portfolio. So, yeah, obviously incredible amount of success here. We already have a stock that is over 10x'd. That is Palantir. Incredible, right? Once again, this portfolio is barely over 2 years old. And then we have, this is basically a double up, right? 1, 2, 3, 4 other stocks that have already doubled. So basically we have 5 stocks in the Patreon portfolio that have now gone up, 2x or more, which is unbelievable. And we got 2 other stocks that are now knocking on the door. Look at Revolve's gains, right? About 92%, and Amazon's 81% gain. So Amazon and Revolve, don't be surprised if those ones end up, being a double up as well. Okay, so let's start going through these. Let's start right off the top. The biggest position in the Patreon portfolio is Palantir. Let's be very crystal clear about Palantir. It became the biggest position because it went up so ridiculously much. I mean, this is insane, right? 1,100%. Unbelievable. I mean, obviously my public account has even a better cost base. I think 1,400 or 1,500%, but still, this is insane. So, when it comes to Palantir, and this one I won't spend too much time on because I've spoken about this one a lot on the main channel recently. Obviously the valuation has just gotten incredibly stretched on this one, right? The P ratios, whether you're looking at trailing 12 month, whether you're looking at forward P, very, very stretched. And so it just makes it harder to get future gains in the stock over the next few years, right? Obviously Palantir is just in a major upcycle when it comes to stock price, but when that breaks, it's probably going to be pretty painful for a while in regards to Palantir, but it hasn't broken yet, and so that's the good news in regards to this one. Business model's on fire. They're going to keep putting up great growth rates for years to go in the future, right? But the issue with Palantir is it's going to frustrate some people. It will stagnate for several years. In terms of, and when I say stagnate, it doesn't mean the stock just stops at whatever price and doesn't do anything. No, it'll crash, it'll come back, it'll crash, it'll come back, it'll move all up and down, but essentially you'll look 3-4 years in the future and you won't have made much for gains, if any gains, in this particular stock. So that's the problem with Palantir. The valuations push so much now that the gains are going to be very hard to come by, in future years. And so that is something to kind of keep in mind here. However, if the stock dipped majorly, then that could be a great buying opportunity. Let's say the stock crashes, goes down to, $50, $60, something like that. Well, then we're talking about is a different situation, especially if Palantir's putting up great growth rates at that time, right? They're still reporting, let's say 40%-ish revenue growth, things like that. But this is a company that now if they're going to grow revenue in the 30s, it's not enough anymore now at this point in time. They really have to be 40s and more. And we really got to start talking about 50% growth rates in regards to Palantir. So Palantir is just, it's just in a tough spot now. That's the thing I'll say about Palantir. But with that being said, do I want to sell it in the Patreon portfolio? Probably not. I've already taken good profits recently on Palantir in the public account. So do I want to sell it in the Patreon portfolio? Probably not. I'm probably just going to hold strong in the Patreon portfolio, even though the setup's going to be tough the next few years. I gotta be honest about that. It's a really tough setup, but who knows? I mean, Palantir just keeps accelerating growth. Maybe all of a sudden they start growing revenue 50, 60%. Like, you never know. And so I'll hold strong for now in regards to those particular shares. I've taken so much for profits in the public account. I'm like, I'm good. Shopify. So Shopify. This is now the second biggest position in the Patreon portfolio, which, by the way, right off the bat, these are banger stocks. I mean, when we talk about these sorts of stocks that are my big dog positions, right? Shopify, Palantir, growth beast companies. And the great thing is with Palantir and Shopify, those being the two biggest positions, you look out 5 years or 10 years from now, are those companies still growing? Yeah. It's just a question of how fast are their growth rates going to be in 5 or 10 years? Are we talking 20% growth rates, 10%, 15%, 25%, 30%? That's really the only question in regards to Palantir and Shopify. But there's no doubt, you look at both those companies, they're absolute growth beasts, and those are the sorts of companies you really want to be positioned into, right? And buy when the stocks were very, very cheap. Now, if you look at a chart of Shopify, I mean, it's about as good as it gets in regards to the profitability starting to improve immensely. Free cash flow has improved immensely. And obviously the revenue growth is incredibly strong. Now, to push back against Shopify stock, here's the issue in regards to this one. Very high valuation name. It's got a Palantir type problem. Now, it's not nearly as extreme as Palantir, right? Shopify would need a, let's call it at least 2x, if not, 3x to get to the kind of crazy valuation Palantir has on it right now, but it's still a sky high valuation. Forward P's likely in the 80s right now. Even if they come in better than expected over the next year, let's say the forward P's in the 60s, that's still like 3x where an average company grows at. But remember, Shopify is growing much more rapidly than an average stock. They're growing 3x, 4x, maybe even 5x the growth rates of an average stock. So to put a 3x or a 4x multiple, it's actually not crazy. It's a very stable company that just grows and grows and grows. And when's that going to stop? I don't think anytime soon, right? Next one up here is Nike. So Nike I've spoken about a lot on the main channel recently. I think I even did a video on the main channel, what was that, last week or so, about stocks I'm buying now. And Nike was one of those. So I've spoken immensely about Nike on the main channel called Financial Education. So if you follow me on that channel, you could get a lot of Nike talk on that one because I've been banging my hand on the table in regards to Nike here recently. I'm banging my Steel membership cards on the table here recently in regards to Nike. Buy the stock and hold and hold and hold and buy and hold and buy and hold. Like, this is an incredible opportunity in regards to Nike that, I think a few years from now we'll look back and be like, geez, man, Nike was such an easy money play, in 2025, and I think that's going to be the situation. So Nike, phenomenal opportunity. Tesla, a little bit of a Palantir-ish problem here. Well, but here's the thing with between Tesla and Palantir, okay? And here's where I'll poke at Tesla more. Tesla offends me. Okay? It's an offensive stock. And it's a stock that obviously I hold in the Patreon portfolio, and I still have several $100,000 in the public account, right? But the issue with Tesla is it trades at this massive multiple, but without the growth. And so we hope there's going to be major growth in the future, but here's the issue. Even when we get to the robotaxi opportunity, the revenue numbers are going to be so small for the first many years of the company because, dude, you need to do such a ridiculous amount of rides. Okay, here's a good way of putting it. Okay, let me pull up charts feature here to really show everybody what's going on here. People have just gotten way too crazy in regards to Tesla. So Tesla's in bad times for their business right now. Bad times, okay? And the company's still doing around $100 billion of revenue. What do you think Uber's doing? Uber is so massive around the world, so many rides. And what is this company doing for revenue? 40-something billion. You know how many years it's going to take for Tesla to ever get enough robotaxi rides where they're at a level that Uber's at? I mean, it's not in this decade. You got to look out to the 2030s. In the 2030s, it's possible Tesla could get to the sort of level of, amount of rides that Uber has. But this is going to be like a build out process. It's going to be like 5-10 year process for Tesla to really scale this business. So in this entire decade, you're never going to see big numbers from that business essentially, right? And even when you do, it's still not going to be nearly as big as people might think, right? Even if you look at Uber projections several years out, they had the company getting to a little less than $60 billion of revenue. So with Tesla being such a big revenue company, the robotaxi opportunity is good opportunity, but it's not nearly as big as people think it is. Not even close to being as big as people think it is. It's a really good opportunity. But the other issue for Tesla that's going to be really be an issue here is they are going to have to face major competition. Uber didn't have to face major competition. Who was Uber's competition when Uber was growing? It was a company named Lyft, joke, and taxis. Easy peasy, lemon squeezy. Who does Tesla have to compete with? Tesla's going to have to compete with Google. Tesla's going to have to compete with Amazon. Tesla's going to have to compete with Uber. we got big competition here. And so that's why I say in regards to Tesla, you know, the valuation is just stretched. The valuation is just stretched in regards to this one. You know, hopefully we can get back to nice revenue growth, decent revenue growth this year, and margin growth and those sorts of things. But the moral of the story here is in regards to the good old Tesla, is the stock is definitely richly valued, right?
Hey, it's Jeremy. I hope you really enjoyed watching that clip here today. What you're looking at in front of you right there, that's 1000xstocks.com. That's my advanced software that I've been working in the background creating for a long time. This software is so much more advanced than what others are presenting out there in the market. And as somebody that's been in the market 15 years, I want to create something that was simple, that had exactly everything I needed to make my judgments on companies, such as forward P ratios, 2-year out forward P ratios, price to sales ratios, forward price to sales ratios. I wanted the ability to be able to compare different companies versus each other. I wanted to be able to compare a Meta versus a Google versus an Apple and be able to see all those different metrics laid out all next to each other. I wanted a service that I could listen to conference calls right through and even be able to toggle and adjust the speed I wanted to listen to those conference calls. I wanted a service that I could search SEC filings right through. I wanted the ability to do that all in one service, and that is exactly what I've created with 1000xstocks.com. If you want to apply for access to this, go to the description area of this video. You can click that link and go ahead and apply for access to this. If you don't want to do that, you can go to 1000xstocks.com. Enjoy.
Cheesecake, next up here, about 47% on this one so far. That does not include dividends. And Cake just very attractively priced, considering they get two great growth concepts that, you know, the company's going to be able to grow immensely over the next number of years. Forward P of 14 on this one, roughly. And that's, you know, I wouldn't be surprised if they come in and beat analyst expectations this year as well throughout the year. So the stock trades dirt cheap, and it has great growth prospects, right? This is one of those things. It's like if Tesla was trading dirt cheap, I would love Tesla stock right now. I'd be buying Tesla hand over fist if Tesla traded at multiples, you know, that were 14 forward P, but it doesn't. It trades at 100 something. That's what makes Tesla not a very good opportunity right now, right? So it's something to kind of keep in mind there. Valuation matters so much in regards to stock market, right? And, you know, if you were buying Tesla stock, when I was buying Tesla stock, whether it's when I was buying in the Patreon portfolio or in the public account, which public account's up like 2,000 some percent, I was getting great pricing at that time. Investors buying Tesla stock today are not getting great pricing. They're not getting great pricing. PayPal, next position up here, up 24% on this one. In regards to PayPal, also very fair valuation on this one. It's not as undervalued as it was, you know, a few months ago, right? Or I shouldn't say a few months ago, a year ago. It's not as undervalued as it was a year ago, but it's still very fair valuation. Forward P of 15 on this one with, you know, I think mid to high single digit growth for the next few years. You know, solid, good company. It's one that I think will be hard to lose money on if we look forward like 3-5 years. It's just a question of, does it appreciate another 50% from here, 100%, 150%? That's a real question. Fubo, obviously, you know, they got the deal with Disney hopefully going through this year. If that gets all approved, that's a very nice opportunity there. They're talking about getting cash flow positive. I mean, there's just a lot to be excited about for Fubo for the next several years. Company's kind of a sleeper, you know, still a stock that's very low priced. I mean, Fubo's still in the gulag, are they not? Is Fubo still in the gulag? I believe they are, as of right now, right? Let's see. Yeah, they're still in the gulag. They're $4. As soon as that Disney deal's announced, I wouldn't be surprised if the stock spikes to $8 or $10. Wouldn't be surprised at all. Once that Disney deal goes through, we're off to the races, baby. Because then that takes... I mean, I think bankruptcy risk at this point is hard to come by. But once that deal goes through, you throw it out and put it in the trash can. In regards to that whole, you know, could the company ever go BK or something like that, right? Then we're looking good. So the moral of the story is in regards to Fubo, the day that, you know, once that Disney deal's announced, stock's flying. And I wouldn't be surprised if people have some inside information on if the deal is going to go through prior to it. So I wouldn't be surprised. So if you see Fubo stock all of a sudden starting to spike day after day after day, week after week after week, don't be surprised if shortly after that you hear an announcement about the deal's gone through. People are in the know. Lawyers talk. All these legal people talk. And word starts to spread. Word starts to get out. And so... if you see a move in Fubo where it goes up day after day, week after week, people know stuff, okay? And so just keep that in mind in regards to good old Fubo.